We're here to talk about wealth and Web3. It feels like a very topical and urgent subject right now. We have Cici Liu, who's the founder and CEO of Venn Partners. She helps institutions from investment banks to wealth funds to help them navigate this new digital asset environment. And Edith Yeung, a general partner at Race Capital, an early stage venture capital fund. Edith is a legendary investor and backed such blockchain companies like Solana. So thank you both for joining us.
Thank you.
I find it useful whenever we're talking about Web3 to start off by defining our terms, because it can mean so many different things to different people. So Cici, do you want to kick us off? And we don't have to belabor it, but what is Web3 right now?
I mean, the Web3 definition changes every 2 months. Like 2 years ago, there's no Web3, it's the Bitcoin, Ethereum, and then turning to now it's covering tokenization of digital assets. Anything that's potentially run on blockchain can be powered by smart contracts. These kind of are tokenized concepts. And I think anything related to these kind of new financial innovations can be called Web3.
Okay, Edith, let me turn it around. What do we normally think of, or what did we originally think of as Web3 when the term was defined, that you feel like it's not Web3 anymore?
I spent most of my time in Silicon Valley, so my definition is quite geeky. So to me is like thinking about Web2 is really owned by the big platform, like the Google, Facebook, Amazon of the world. And if you imagine like Facebook basically monetize all the user data and none of us get a piece of it. So the whole idea of Web3 is really about decentralization of the internet, where you and I should actually own a piece of the data and decentralized Facebook, decentralized Twitter. Like, why do all these big platforms own all of the data then, but we don't own any of these? So therefore, when I look at Web3, it's really about the building block of, so like the Solana of the world is the layer one, which is the foundation where the sort of distributed or decentralized application built on top of it. And there's layer two related things all about scalability. There's custody, security, and many facets of what define Web3. But I think in Hong Kong, and let's say if I am Hong Kong government, is mainly really focused on crypto exchange, digitalization of the assets, and a little bit different of how we look at it as an early stage venture.
There's a feeling in Silicon Valley that the air has gone out of the Web3 idea. The conventional wisdom is, that we've all moved on to AI, and we'll talk a little bit about that later. But is that, from your perspective, is that wrong? Is it way too early to dismiss Web3?
We're sitting in Hong Kong, and there's a reason why we're here. The mood in Silicon Valley or in the US is a little bit dire. There's definitely a big cloud over the industry because not a little bit undefined legal framework and how that's going to turn out. But having said that, there's still like big platforms are not giving up and still pushing the envelope. PayPal did an integration with MetaMask. You look at Interactive Broker now actually support to let Hong Kong retail investor to trade crypto. Robinhood, the Venmo of the world are still sort of supporting it. But I think like the key theme of this year is about regulatory and compliance in the US. Very, very different mood compared to being here or in Singapore, where the government really wanted to support it and want retail customers and put together all these safeguards to get everybody to be on board in crypto.
So I want to start a poll question and get you all to vote on this, and then I'm going to ask, as you all vote, I'm going to ask Cici and Edith this question. The poll question is, and I'm going to tinker with it a little bit. What portfolio allocation would you currently give to digital assets such as Bitcoin? And we've got 1 to 2%, 3 to 5%, more than 5% for the real gamblers. But Cici, wow, you're advising funds on Web3 and digital assets. What's your answer to this question?
I mean, I think like Bitcoin obviously has been recognized as digital gold, and the scarcity defines the value and then supply and demand. And even though some people may argue that there's no intrinsic value, but we'll buy luxury cars, luxury watches, luxury bags. What's the intrinsic value really behind these brand names, right? So I think for that reason, I think human society makes Bitcoin the value will hold, even though there's no really intrinsic value. Even though they're making the ecosystem have the BRC tokens now to have some utility on the blockchain. But I think comes to investing in digital assets, if you're talking about crypto assets, it's really important to have a diversification and also active management. Before the market collapsed, a lot of people say, well, just the top 10, market cap crypto assets. But then, top 10 crypto asset 6 months ago may not be the way going forward. Like, for example, Dogecoin, right? This is in the top 10. Like, for example, in the last month, there's a Pepe the Frog coin.
Yeah, perhaps. Skip that one.
Yeah, exactly. So you can't really define crypto asset based on market cap because it's so volatile. And to really understand what's the utility value of that project creation is really important. And also the tokenomic design, like Edith saying, the Web 2 and the Web 3 is a new way of kind of define who owns what, right? The Web 2 of the world controls the shareholders. It's all about shareholder value enhancement. The Web 3 is about stakeholder. It's about everyone in the ecosystem. You can be a service provider, you can be a user, or facilitating some sort of a service. And everyone, in theory, should share a portion of the wealth. And that's kind of really the definition between Web 2 and Web 3. So I think people should have a diversified.
Well, if you're voting here, where are you putting the allocation?
I think this has come to the CFA time. It's like depends on your time horizon of your investments and your risk appetite, and then also when you need to buy a house or paying tuition, and that's still played the old finance theory still apply to Bitcoin. So yeah, it depends. If I were me, more 5%, more than 5%.
Edith, what is a conservative but diversified approach to digital assets right now?
I think my answer for this one is it depends. I just spent some time in Brazil, and because of political instability and the currency devaluation, actually is 100% in crypto. Because locally, if you are holding Brazilian real, you may actually would lose half of your net worth if you just hold that in the local currency. So in that sense, it really depends on what region that you're in. Mm. The more established the financial system is, then you're probably much lower. But you can imagine in certain developing country, this is actually core of
And if you're sitting here in Hong Kong, where would you put the allocation?
I think a handful of my friends who are local family offices, they are actually in sort of the 1% to 5%, where, as Cici was saying, Bitcoin is like digital gold, so they hold it long term.
So Edith, we're coming through the crypto winter when a lot of the trusted institutions in the digital asset field kind of radically squandered the trust of both investors and customers. I talked about Edith's sterling investment record, but her firm was also an early investor in FTX. Mm. So what can the audience, I guess, and what lessons do you draw from the collapse of an institution that seemed at one point to be pioneering this new field?
It's crazy to think about, similar to SVB, which last check, it was valued at $34 billion in 2022.
Silicon Valley Bank.
And FTX was valued at $33 billion. And both of these you would consider too big to fail, disappear in 2 days. So I think the biggest thing learning, especially for this audience, is definitely don't put greed in front of control. It's really about separating church and state. And there's 3 things. One is if some of you are continue to bullish on crypto, really need to separate a trading platform is not a bank. And you should really, number 2 is to work with custody provider. That's why we invested in standard custody of PolySign in the US, where you should pay somebody who are expert to go protect your asset and don't put it on just the platform. And number 3 is so similar to now all the startup in Silicon Valley, need to think about treasury management. You can just, I mean, obviously I love HSBC. At the same time, you cannot just bank with one. You need to have open account in multiple platforms to make sure that you can hedge against, just in case if SVB doesn't work out or FTX doesn't work out, you have other platforms that you can work with.
Cici, do you think the industry has internalized some of these lessons from situations like FTX and is at a point where it can credibly re-earn customers' trust?
Yeah, absolutely. I think not just the banks are involved in providing custody service. I think that's a great idea because banks been custodize assets for the society for decades, right? So you have the trust and you have the proficiency in the cybersecurity measures to do the business. And in addition to that, like industry bodies like industry bodies are issuing like a consultation papers like ESTA. So outlining the guidelines of how you should custodize digital assets, specific features like airdrops, like forks, etc. So I think with overall the whole traditional finance getting seriously involved along with regulators, I think this ecosystem is becoming more mature. And also, I think, that's why I think education is so important, because with the big banks to be involved, and obviously will push this industry move forward faster. But within the internal stakeholders, if you have a different understanding on certain concept, it's really hard to kind of move the speed that they want to. So education is important to get your employees up to speed so they can be relevant for the the financial innovation, and everyone can thrive in the new financial ecosystem.
Well, let's stick with the regulation piece of it. I'm just struck, and maybe you can explain this, Cici, why the government here in Hong Kong and in China is taking such a dramatically different and perhaps more open-minded view of digital assets than what we're seeing in the US, where every day is another SEC lawsuit against companies like Coinbase and entrepreneurs threatening to move out of the US. What is going on? Let's start with here in Hong Kong, where they're ready to start licensing exchanges and perhaps creating some new tokens. Why is it so open-minded here?
I think I'm really, really happy with how HKMA is coming up. This is very speedy evolvement since the end of last year, basically, regulating the virtual asset trading platforms, figure out how to involve retail investors and how to regulate stable coins. And I think that is really, really great. And then also, obviously, Hong Kong's related to China. In China, like blockchain, Web3 is part of the next 5-year plan. And then we all know from 2012, when China started pushing the digitalization of the economy and really lift the whole economy to a next level. And then that's why we see the wealth generation in China. And they don't want to just stop at on the internet. They want to move the society to the blockchain, and that's very clear. And I think having Hong Kong to have access to the world, it can be a test. Run. I don't think the policy is going to do a U-turn, even though they banned like crypto, they banned mining, and then I think there's a reason for it, because in mainland China, the financial structure is not mature enough and such a big population for people to gambling the cryptocurrency, and as we've seen happening last year outside China, so I think overall, I think that's great. I think it's very positive in Asia. And US, obviously taking regulation by enforcement, different departments of fighting power and finding people. Yes, kind of unfortunate, yeah.
Well, Edith, I want to ask you a different version of the same question, which is, what sort of internal goals are the governments in Hong Kong and China pursuing with this kind of radical open-mindedness towards digital assets? Like, what does it, aside from the innovation and financial opportunity, what ends are the governments, what opportunities do they see in digital assets?
I think Hong Kong government, for sure, being the Asia, financial center of Asia, if you have clear policy, regulatory policy, you can attract good actor and good business that you want to see. the more clear you are, then all the bad actor will go away in some sense. But the most important part is that if you really sort of get it right, then you can really drive like true financial system and really get, let's say, the digital RMB. Can you imagine like the rest of the world start trading, using this currency instead of US dollar?
Interesting, okay.
And the sooner to you be able to sort of enable the world be able to transact, why am I still paying $15, $45 to wire transfer from San Francisco to Hong Kong? If I can just, peer-to-peer, of course, with full-blown KYC, AML, but basically cut down that time to seconds and super zero costs. That really is a real pain point that I think the government realized that if they can achieve that with the right framework, they could be leading the way for the rest of the world.
Interesting. And Cici, I mean, this is such unexplored territory. Are there also like serious economic risks that accompany this experimentation? It's maybe things that we can't even imagine.
You mean the CBDC experimentation? I mean, yes. I mean, definitely. Like, for example, the design of the eCNY, is like 2 tiers instead of a direct CBDC, like a lot of European CBDC is exploring. So basically, they want to maintain the financial stability in the banking system as is. So central bank will be issuing the eCNY. However, commercial banks, telecom companies, or payment platforms will be distributing the eCNY. So they still keep the banks relevant, right? And they want to make sure, the eCNY doesn't bear interest. It does not compete with cash, physical cash. Why is that? Because if the adoption of eCNY suddenly become very high, people don't keep the deposit in the banks anymore, right? It causes credit squeeze or narrow banking. Like in a different way, like what's happening in the US. So they are very, very carefully designing this kind of elements. Another thing is the fiduciary duty of who's looking after the crypto wallet, right? It's not your. It's not your wallet, it's not your coin. So yeah, so like for example, I lost my phone today in the taxi, and if I had the only digital RMB in my wallet, that would be more devastating than how I'm feeling about that now. So that definitely has a lot more to study, a lot more to research before it become, the whole society adopting the.
Yeah, I mean, we've just seen in the U.S. with Silicon Valley Bank and New Republic Bank and Signature Bank, how swiftly customers can lose trust in a financial institution and paradigm.
Same as stable coins. Luna, Terra, the same loss of trust.
Right. We're at a conference and we're talking about technology, so we really need to talk about AI.
Of course.
Edith, well, let's stay with blockchain for a second. Is there a marriage here of the 2 great tech trends in the last 5 years? How does AI inform the kind of blockchain companies and opportunities you're seeing now?
For your sake, I brainstormed on a whole bunch of ideas. Can you imagine ChatGPT be able to take a wallet address and figure out all the activities associated to it? Or basically ask ChatGPT to go through the entire Solana blockchain in the last 24 hours to figure out what are the NFT activities? Or I guess one of sort of the marriage of IP. And can you imagine, I'm like addicted to Midjourney.
It's remarkable if you haven't experimented with it. Incredible.
And I will create, let's say, a car on Yoyogi Kusama that looks like a beetle. Mm-hmm. And in this case, maybe it recorded on the blockchain, will IP come from where? And that is a beautiful marriage of both worlds.
So protecting IP, even though so much of AI and generative AI right now feels like it's undermining IP.
Yeah, and maybe if it's recorded on the blockchain, if there's any sort of commercial and revenue, then everybody will get a cut and it's actually on a public ledger. That makes a lot of sense to me.
Cici, where do you think the marriage is?
Yeah, right, definitely. I feel for blockchain or smart contract to run, one of the big things you have to connect to the real world, right? So it's like what you call that oracles. So you have, especially banks using blockchain or smart contract, you have to feed the data, the real market data. So with AI, perhaps that can make it more efficient and more accurate. And like, for example, like, there's this big struggle for the ESG push, right? The green bonds, everyone is talking about it, but essentially it's really expensive for the issuer, for the syndicator, and for the asset managers to really own a green issuance, right? And then with AI, I don't know, maybe it will help to collect data, verify data, and become hopefully more cost efficient in the future. Yeah.
Edith, I want to start including some of the wonderful questions we're getting from the audience. Would you share your most successful crypto investment so far? Is that got to be Solana?
Yes, Solana. I love Solana. And plus, they just launched a phone called Solana Saga.
Well, maybe a phone, did you say?
Yeah.
And maybe Cici can have it as her replacement for her iPhone.
Yeah.
I mean, to be honest, I invest in a crypto fund. So I prefer to have professionals to look into this space.
What's the most exciting opportunity, though, that you've identified in your years in the space?
I think there's a lot of like derivatives on the blockchain, and I think like for example, we earlier we talked about everything investments about cash flow, right? So you invest in a portfolio of crypto assets. If you really know their fees they're generating, that is a great indicator that there's a real world use that people are paying for it. And that's the whole point of Web3. It's not free. Web2 is a free in terms of like you don't have to pay as a consumer, but your data is being used, right? So Web3, like no one's using it for free. If you use this blockchain or protocol, you have to pay. So as a result, you can really track which projects are thriving or really having real traffic by the fees that are generating. And then because it's on the blockchain, because it's transparent, you can actually see it yourself. So that is, I think, is a great way to find investments in crypto assets. But I still have to actively manage because, for example, Luna was great for maybe, I don't know, 6 months or a year. And you can't just say, oh, it made me this much return, then I'm going to keep it and not look at it in 2 years and it will be gone.
Cici, what's your view of this new generation of tokens that are tethered to traditional financial products like deposit accounts versus stable coins, which are traditionally tethered to fiat currencies or other cryptocurrencies?
Yeah, so like JP Morgan is doing tokenized deposit, right? So, I mean, I think it's interesting and then it's something very embraced by MES in Singapore, but then I just found this hard to understand how it can be interoperable with other banks unless other banks also doing the same thing. And
that's unlikely.
Right, so then how do you just basically, instead of wiring the funds, you change tokens? I understand maybe reduce the settlement cost. But I think stablecoin is a very different, it will be used in a different world. I don't think stablecoin will ever replace fiat. And the stablecoin going to get regulated this year going forward, and I think it will be really interesting to see which stablecoin will be left by the end of next year, for example.
Edith, do you have a view on traditional financial institutions like JP Morgan minting their own tokens?
It's super interesting. At the same time, I think we should sort of separate where there are things that is really for the whole concept of for wealth, like preservation, which I think, as many family office here locally is mainly focused on Bitcoin, versus on stablecoin, let's say in the US, USDC, USDT. A lot of still like the highest trading volume is actually USDT, is because people are trading and doing a lot of arbitrage, going in and out, mostly using for crypto trading. So the purpose of each is a little bit different. Me personally, I think the whole looking at least what government is pushing for is really a one-to-one real asset-backed stablecoin. And I think that's what sort of worldwide to sort of protect the community is to make sure that you don't just create vaporware.
Well, I love ending these panels on big, bold predictions, and an audience member has given us the perfect question. So we'll end on this. Could Bitcoin replace the US dollar as a global currency in the next 20 years?
No.
No, no way.
Okay, there you go. Cici, Edith, thank you very much.
Thank you, Brad.